Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academic of the Institute of Chartered Accountants of India. Right. So, I think many of you are greeting. I already saw Mr. Navneet Maurya, Mr. Namrata, Nitya, Savya Khan. Welcome. And yes. So all of you, I thank you and greet you well. Tanu also is come. Good. Just thank you for all your greetings. And Prerna ji also. Those who join a little later, please don't mistake me if I have not acknowledged your greeting. Anyway, I welcome everybody here who is listening to this lecture. We've already covered quite a lot of ground in dividend. So we finished interim dividend, difference between the two. Also, we saw how so many things we saw. Okay, and we also did about 10 or 11 multiple choice questions, which could have firmed up your understanding of this subject. Now, we move to where we stopped last time. We also saw transfer of profits to reserves. We saw two different type of problems. This is a frequently tested question, so it's not very difficult. Once you appreciate the three rules, apply them simultaneously. For people who are financially, sort of numerically savvy, like you, this is not a big deal. It's only people like me who aren't numerically savvy. We find that, Adil Khan will come. Okay. I shall refrain from seeing chat a little later. Okay. So that once the question starts coming, I get in. So we saw all this. Now we come to this, though it's very innocuous, remember this. Failure to pay deposit and a failure to comply with the provisions of 73 and 74 relating to acceptance and repayment. Straight away, you cannot declare a dividend. So one important prohibition. See, non-repayment of deposits, non-compliance with 73 and 74 are frequent repeat points in many sections where they prevent a company from doing certain things. For example, intercorporate loans and advances, so on and so forth. Later on in final self-paced module, you might read it. Point here is, so these deposits become very, very important. You can't reward the shareholders or take money out of the company when the depositors have not yet been paid or some compliance is missing. Here they are going by all compliances, not just repayment. Okay. Though repayment is the most important compliance. Now, once it is declared, we also saw this because we had a little more time. I covered this. Anyway, since we might it was the last fag end of the session, you might not have, let's go through it again. Dividend should be paid within 30 days. Fundamental. Dividend declared by board, which is interim dividend, or by shareholders at an AGM should be paid within 30 days. See, when the board recommends a dividend, the shareholders have the right to reduce it even to zero. But once declared in the AGM, please understand, once the shareholders have given their consent in the AGM, even they cannot call back that dividend. It has to be paid within 30 days to every shareholder whose name is registered on the record date. We saw that already. In case any dividend is not paid or claimed, okay, I rarely see not paid cases because I have made my attempt to pay. The account is not operative due to some reasons. It's not claimed. So today's electronic transfer scenario, what we normally do is we arrive at the dividend, compute it, and we send a single email to the bank with an instruction to pay, with the bank account details of every in an Excel spreadsheet. So all they need to do is connect it to their banking software, and the software will take care of it. So check, it will transfer. Problem is when the money goes to the other side, if the account is not willing to take or able to take, due to many reasons, the banking industry today is riddled with procedures and rules and regulations. So non-compliance with these will freeze an account. And if frozen account, you cannot receive payment. So it will get bounced. That's not my problem. It's a company. I did my best. Okay. So whatever it is, even if it is not claimed and it's come back to this account, beyond 30 days, if you cannot hold it, it's not your money. I hope you understand the principle involved here. The dividend declared is not our money. I say your money, sorry. It's not the company's money. It is the shareholders, specifically the recipient's money. They have not collected it, okay, we have not paid it, whatever. That amount has to be made separately kept aside in an account which will be available. That interest also we cannot enjoy. Later on, we'll see what happens to that interest. So we have to keep it in a separate bank account with a scheduled bank. And that account will be called unpaid, unclaimed dividend. Within 7 days, this has to be transferred. So you have to remember these number of days. It's not very difficult to remember, but you can try to remember, which is 7 days from the end of 30 days. Then, once it's transferred, it lies there till for quite some time. From the date of declaration, within 90 days, you have to prepare a statement giving the name, last known address, and unpaid dividend account and put it in the website or any website approved by government for this purpose. Nothing has been approved as of now. Idea is public can go there and see. We'll come to this a little later. When you come to Investor Education and Protection Fund, we'll understand it better. But as of now, remember, this money is with the company. So any person who is now going to claim this dividend has to do so from the company. So he has to go there and check. His name will be there definitely. Once his name is there, all he has to do is to approach the company, and then they will insist that you give me your DP ID. And that DP ID should be linked to a regular bank. If this is not there, don't waste my time. Why I became very blunt is because many people don't understand that today a listed company cannot pay dividend to any account. It can pay only to the DP account linked to the deposit department account. And every share is dematerialized. So you have to hold it only in DP, in depository, in dematerialized form with the deposit department, who will in turn be transferring it, or who will be taking care of your account with the CDSL or NSDF. So very convenient method of holding financial assets. And you can dispose it easily and realize the money with electronic finance account. It's very easy. To understand how this is so easy, you should have lived in the early 80s, or you should have been active in the market in 84, 85 up to 90, which I was a college student at that time. So and then a chartered accountant. So that time, with small little money that I had, I used to invest it in the IPOs and market. It was all physical shares. So I don't want to further elaborate on this, because when you learned dematerialization, you would have understood why dematerialization was so important. 91, the dematerialization effort started. 91, but it was the entire investor community fought. Rightly or wrongly, they fought. Whereas NSE, the National Stock Exchange, which came then, and the SEBI were strongly, 92 SEBI was strongly pushing demat. Okay? But obviously in a country like ours, riddled with unaccounted wealth, people are worried about the transparency that dematerialization would create. So rightly there is the fought. But then the fighting pulled on and on. Since 96, it became compulsory. Every listed companies dematerialization, so that it became so easy for us to. Just for a matter of interest, I exited the market post Harshad Mehta when I sold my entire paper shares to my then partner. In one shot, I sold it. He gave me the value of the share on that day, took it and went away. Thereafter, it was his problem to sell it, give delivery, blah, blah. We had a combined portfolio which we had generated from our common business. I walked out of the business. When I walked out, I got X amount for the business and for my portfolio part, he said, you take my money, take your money. And he gave me, because he was interested in continuing Harshad Mehta. Then, of course, Harshad Mehta scam came, he lost money. That is all different story. I went out at that time, when physical market. Then I never entered the market again. So that I never got caught in KP. And post KP, KP is Ketan Parekh, the two gentlemen from Gujarat, Mr. Harshad Mehta and Mr. Ketan Parekh. Okay. They were both, see, great people have come out of Gujarat, and also these also have come out. Ketan Parekh and Harshad Mehta and Nirav Modi also Gujarat. And of course, for your information, Dhirubhai Ambani is from Gujarat. Of course, our enlightened Prime Minister Narendra Modi is from Gujarat. The father of our nation is from Gujarat. Sardar Vallabhai Patel is from Gujarat. So it's not that we can say anything about that. But then, surprising that Gujarat produces both great people and criminals like this. And unfortunate. Okay. But that, I think, is due to the intelligence. I'm sure many of you saw the serial on Harshad Mehta, which sort of lionized him and made him into some sort of a cult hero. He was a criminal to begin with and an end. It's never, he cheated the State Bank of India, took some, not only State Bank, many banks, took the money out and they invested it in the stock market in Dutch shares, kept pushing them up. Unwary investors purchased these shares at high prices. Then successively, like in any Ponzi, there will be buyer to buy, so that there will be a support. Then immediately these players also will buy. That way, the price will go up again. Demand will come. So that the guy who bought it will seriously think that this stupid loss-making Karnataka ball bearing is a great company. Without even seeing the balance sheet, he will decide. And then finally, when Harshad Mehta's scam was exposed by the State Bank of India clerk, the assistant manager or somebody who was come, he saw the extraordinary general ledger is not tallying. So much money is missing. Where? And the investigation led to Harshad Mehta being arrested and all that. So just for your information, see, many of you are young. You may not even be aware. I mean, you may be aware, but the reality you may not be aware. And this serial has not done any good for our investor community. It has made this gentleman a hero, which he's not. He's a criminal. KP was also a criminal. Where Harshad Mehta played with general shares in the physical market, Ketan Parekh played with IT shares, shares of IT companies, like at that time Polaris, Infosys for that matter. So on many companies. So he played with those shares and same game. And he took it from the cooperative banks of so different victims, but same model. And finally, KP, those shares collapsed in 1991, bloodbath in the Dalal Street, and so I escaped it. And 2002, when the KP scam had completely died down, market was at the bottom. I entered the market. And at low prices, I acquired shares. 2002, very low prices, unimaginable bargain basement prices. So I'm just giving this as more of an interest and to make the class a little interesting. But this dematerialization was fought by people, and finally it came. And because of that, today everything is seamless. You can own shares in companies, receive dividend, give delivery online through DP, take delivery online into your pool account, and then go into a DP account. Keep it in the pool account and sell it. So many things can be done. Those of you are actively trading, you know this very well. So, if that unpaid, unclaimed dividend account, this money is lying for 7 years. In the expiry of the seventh year now, the last day of the 7th year, counted from when you transferred it to the deposit account, you will transfer it to please note it, Your Honors, the unpaid or unclaimed dividend plus the interest. So the interest cannot belong to you. It belongs to the investor and it has to be used for him. So the Investor Protection and Education Fund was formed and you transfer it to that. But in case you don't transfer this money within after 30 days, within 7 days, post 7 days, which is the grace period they give you, you have to pay interest at 12% per annum from the date of default, okay, which is 30 days, expiry of 30 days. Because 30 days you have to pay. Default happens on the 31st day, 30th day midnight, default. Then 7 days grace, but you're not paid it. So you have to start from that day till date, till whenever you have to, you deposit it, you have to pay interest at 12% per annum. So rotating this money, you have to pay 12%. 12% is a pretty steep rate. Pretty steep rate. Yeah. I don't think Aditya case, it's a good point. Banks were not closed after Harshad Mehta. See, I'll tell you, State Bank of India lost huge amount. But when they totaled up the amount that the gentleman had taken from them, no, the number they arrived at, such a small amount of materiality concept into thinking. They ain't like, so State Bank of India in the balance sheet, it got written off in revenue. So what I'm trying to say is, I'm not saying what he did is right, but I'm saying from State Bank, most banks could write it off and swallow it. And I think no bank failed because of Arshad Mehta. Ketan Parekh destroyed banks. No doubt about it. Because by then the banking community was trying to boost window dress its profits by investing in the stock market. That was post 90s. At the peak of it in 97, 98, IPOs are coming, and Global Trust Bank is a classic example of one such utter failure. And the other banks also had to write off substantially. And they took a huge hit in their thing. But for GDP, it was an insolvency issue. You can check out. And finally, Global Trust Bank was acquired by Oriental Bank of Commerce. To my knowledge, post Harshad Mehta, no bank was collapsed. They suffered loss. The scam came. Shareholders suffered heavy losses post Harshad Mehta scam being revealed. See, today, it cannot happen in today's market. As I might have mentioned to you, I was the secretary of the Tamil Nadu Investor Association for 3 years. Recently, I met another member of the association yesterday. So TIA, we are constantly monitoring. TIA, Vadodara, Ahmedabad Investor Association, we are constantly monitoring now. 1. 2, today, the SEBI is cooperating with us. The investor community, SEBI is very transparent. NSE and SEBI are continuously giving us, BSE are giving us continuous support to spread the message. And they also give us money to spread message of safety and all. Importantly, in no day, if the price of a share goes very high, the intraday freeze happens, which is one of the best things that can ever happen. Both ways. When it falls also, it will freeze. When it rises also, it will. So panic selling you cannot do in a share. And then investigation will happen. So many protections are there. And investigations are there. Manipulating in shares is going to be very difficult. Another Harshad Mehta or another Ketan Parekh will find it very difficult unless somewhere else he does it, and that too in a totally through IS information systems and through hacking. So this is a question you can try to answer. It's a question asked in the examination. See, I'm covering multiple choice questions, but these are actually questions that you have to write in the exam now. So that's why I'm covering these also. To my knowledge, this exam is both writing, right? Most of it is writing. The few MCQs, I'm not really aware. So you also have to write answers. ACMA Engineering has declared it 10% and its AGM held on 27th September 2020. See, this is a very fantastic question I'm covering here. If I'm covering general classes, I'll cover there also. Why? Because this is the trick question from the institute that covers both the chapters. That is why CA exam is tough. See, one question is dividend, which you know. What is the knowledge that you need to possess? 30 days, 7 days. The date on or before which ACMA Engineering Limited is required to pay the dividend. 30 days from the date of declaration. Date when it is required to transfer, 7 days from the expiry of 30th day. So that you know from what I taught you. What you may not know is General Classes Act. Or you will know when you attend that class or watch the video. Section 9 of the General Classes Act, 1897, deals with, it's there in the syllabus, I think, to my knowledge, you studied, deals with computation of time. The section states that in any legislation or regulation, it shall be sufficient for the purpose of excluding the first in a series of day or any other period of time to use the word from, and for the purpose of including the last in the series of day or any other period of time, okay, to use the word to. So the law, by using from and to, clearly gives us the signal that the first in the series should not be included. See, the date of declaration is the first. From the date of declaration, that day should not be included. 30th day should be included. Similarly, the date of expiry of the 30th day, okay, should not be included. But the 7th day should be included, just for your information. So we have a date here, 27th September 2020. So we cannot include 27th. Okay. So what I have done is I have given a brief summary. This is how you have to write the answer also. Briefly summarize the section to the extent you can, if not possible in this language, in some simpler language. So General Clauses Act, you can even put it this way. General Clauses Act states that while computing time, the first of a series of dates beginning with the word from should not be included. The last beginning with the word to should be included. Sorry. So you have to transfer it within 30 days, right? So what you do is, for 30 days, you should not take 27, which means 30th day. So if you start on 28th September, 1 month will finish exactly day to day. Remember, if it is day, you will count days. But if it is, if you count days, here it's days. So you have to actually count 30 days. Luckily, September has only 30 days. So 31st day, you have to be careful. 30 days. Therefore, it will be exactly day to day. It will be 28th, would end on 27th. Right? So 27/10, you have to, before 27/10, you have to pay the dividend. And that 30 days period will commence from 28/9. Right? The next 7 also you have to be careful, because the 7th day, the 30th day will end on 27/10. Right? So you begin on 28th October and you count 7 days. So you have 27th, that you exclude. This you exclude. This day you exclude. So 28. So 28, 29, 30, 31. October, na? 1, 2, 3. 3rd October. 3rd November. October, you have to count. See, whenever they say days, count. Whenever they say month, date to date, they said 1 month. Then exactly, if you're beginning on 28th, 27th of the next month. But if they say days, then you have to count, which means in months like February and October and other months, you'll have 31. Right? Let me see if you have any questions. 11 people have raised queries. Let's see. Investor comes on 6th year, full amount with interest, sir. 6th year then, up to 7 years, you can keep it. No? Very nice question, Mr. Navneet, which you can yourself answer. Am I correct? With the knowledge that you have, could you not have answered this question to yourself? 7 years, 6th year. Therefore, 7 years not expired. You will get full amount with interest, definitely. Sorry, he will get only the dividend, no interest. Interest will remain there. It will go to IEPF. Only the dividend. If that is the question, answer is no. His interest he will get. Because the company has not delayed now. See, it was not the company's fault. It was his fault. He didn't claim. Why should I give him interest? Any interest at all, even the bank interest. That will go to IEPF. What happens if the company delays the transfer to unpaid? So heavy penalty, boss. We'll see that. Don't worry. Heavy penalty. We'll see that. Non-payment of dividend, non-transfer to unpaid dividend, heavy penalty. Don't even worry about it. Fantastic, fantastic, fantastic. Beautiful. All of you have understood the question. Excellent, 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 excellent. Yeah. Okay. Dividend only. I have myself collected. I have collected money for many clients from IEPF. Rarely they come within 6-7 years. They always come after 7 years. Lot of time. Because usually these are all senior people who don't even tell their family that they have shares. They would have purchased them, say, 20 shares in long ago, 60s and 70s. The bonus and all will come. Bonus will be accumulated. Dividend on the bonus will be there. Huge amount will be there in the IEPF on their name. And share value, of course, would have been huge. So, huge activity. I've done it for a few people out of, I don't charge a fee. See, suddenly the guy gets something like 40 lakhs or 50 lakhs, which he never thought he will get, which he never even knew that he had. He's happy and he gives some money. I take it. So payment dividend can be paid in cash, check, warrant, any electronic mode. We saw that today it's mostly electronic mode, except unlisted companies and private companies, which may pay by check or what. The registered shareholder of the share or to his order to his banker. There's the case of Nidhi companies. No, see, Nidhi companies are basically finance companies. So that their operations are usually and very definitely restricted to a very close area. Large account, it will be a very well-known. So people will know each other to an extent. A small part of a city or a whole city in the case of smaller towns, small towns where everybody knows everybody, and the Nidhi will be a popular and prominent entity. The idea is they only members. So anybody who wants to deposit money has to become a member. So they'll give him 1 rupee. Per share, 1 rupee, they'll give 1 share. 1 share. So you are a big businessman in that town. You want to borrow some money. You go there. So they have some money to lend. They give at decent rates. So they give you the loan. Again, security of property they'll give. But for that, again, they will ask you to become a member. They give you 1 share, which means 1 rupee. So we can't keep sending it by bank and all. Yeah. So what we do is, anyway, Nidhis are allowed to operate savings accounts. Only case where, other than banking company, Nidhi companies are allowed to operate savings account. The idea is, in that town, there'll be a lot of small middle class people or anybody for that matter who wants to save some money. Some interest will be claimed for, he may be putting aside money for some need that can be deposited in this account, savings account. In that account, this dividend will be credited. Okay, if the dividend is not claimed within 30 days. So instead of unpaid dividend account and all that, they can simply transfer it to his SBF. Whenever he comes, he can take it. Okay. Yeah, questions. Any person claiming to be entitled to any money transferred to the unpaid dividend account may apply to the company for payment of the money collected. Okay. So money transferred, noted, not money interest earned. Money transferred. Got the point now? Only the dividend was transferred. Interest was not transferred. Interest came later. Somebody was asking, unpaid dividend. Penalty is 1 lakh rupees. Any violation on payment. Non-payment of dividend special, but any violation. Okay. 1 lakh rupees. In case of continuing failure, with the further penalty of 500 rupees for each day. So if you don't transfer within 7 days, be ready to pay 1 lakh. And for if you take another 20 days to pay, for every day you pay 500. 20 into 500 or 1 lakh. 10 lakhs. If the delay reaches a stage where the total reaches more than 10 lakhs, stop at 10 lakh. Not only the company, every officer who is in default. Officer in default, it's a definition. Please check it out. Every KNP is an officer in default. Every 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 director is a KMP, company secretary is a KMP. KMPs are officers in default. Directors are officers in default, except independent directors, everybody else is liable. So 25,000 rupees with a further penalty of 100 rupees up to 2 lakhs. So this is the penalty for the with regard to unpaid dividend. So anything non-transfer to unpaid dividend account, non-transfer to IEPF, not giving the statement, non-paying interest, everything. Okay. Now we come to what we call the Investor Education and Protection Fund, IEPF. This is not a new concept introduced by the 2013 law. The IEPF was always there, even under the old law. You need to understand this because somewhere you will find the old IEPF will be mentioned. See, under the old law, while providing for dividend, they had a IEPF, Investor Education and Protection Fund. Okay. And that IEPF would sort of, their money will come to this IEPF. See, they wouldn't want to continue that because they have formed their own new law. So they want to set up their own fund. The old fund also is there. Like that. As the name implies, now the Investor Education and Protection Fund. So this is a fund. This is a body that takes money and keeps it, okay, safely as a trustee for the shareholders who are entitled to it. One. Also, the IEPF has certain roles with regard to the investor community in general. So that also they will bring. We will see. First, we have to know, very importantly, what are all the amounts to be credited to the fund? What goes in? Say at the time of forming the fund, central government may give money. There will be budget allocation now, so they might give some money. They might even donate it to the central government, by the central government. And of course, very importantly, this is, we remember, within 7 years, we have to transfer to the, from the unpaid dividend account to the IEPF. Any amount in the general revenue of the central government. See, before the old IEPF was formed, these amounts were transferred to the general revenue account. Long ago. Now that money also will come here. Amount in IEPF, what is that? The old IEPF. That will come here. So already when IEPF was there, now that money will come here. Then this money will be invested. They will keep it idle. Possibly they will put it in treasury bonds, safe investments, trust investments, which will be coming. I have repeated it twice. Ignore it. G, you ignore. Now comes something more important. See, whenever a company goes for an IPO, there will be application money paid by the applicants. Now, once the IPO is completed, shares will be allotted. Maybe there will be some excess application money, or some people will not be allotted shares at all and the money will be returned fully. Whatever it is, there is a rule on the time within. We already saw that in prospectus and allotment of securities, that they have 15 days it has to be returned. Failing which, again, there also there is a heavy interest. Now, this application money remaining unclaimed, you don't have to transfer it to unclaimed application money account. You can keep it with you. But if 7 years it remains unclaimed, it has to be transferred to IEPF, application money unclaimed. Also, any deposits which are maturing, you have to repay. So you attempted to repay, unable to, because of either non-availability of the depositor or inability for you to pay, etc. 7 years or more, transfer it to IEPF. Matured debentures unclaimed. In all these cases, when they claim it, you can't keep. Unclaimed. These are all capital items. Please understand. They are capital items. Idea is Nobody is claiming them from you. You don't keep it. You give it to IEPF. IEPF will repay it when they come. Interest accrued on HIG above. Okay. See, this money normally cannot be touched by the IEPF because this is capital. This doesn't belong to them. It's OPM, other people's money. But the dividend that they get now, it's a huge amount. You'll have to really understand. When I finish this, I will tell you. Amount received from sale proceeds of fractional shares arising on issue of bonus shares. See, when we issue bonus shares, we might say 1 share for every 3 shares. So dividing by 3 is a nightmare. So there will be some fractions. So to that extent, we can't allot share. So we'll 1/3 you can't allot. 2/3 share, 1/3 share you cannot allot. So that 1/3, 2/3 value will be paid. Okay. Whatever, the fractional share value will be paid. If it's not claimed, okay, the other party is not claiming. Also, in a merger, there may be acquisition of shares by a acquiring company. So the shareholders of the acquired company may be given shares or by money. So they don't claim it. That also will be transferred here. Okay. Redemption amount of preference shares remaining unpaid or unclaimed 7 years or same. See, here we talk about matured deposits, matured debentures. Here we talk about preference shares redeemed but not claimed. 7 years. Other amounts as per Rule 3. See, Rule 3 gives a few. It's not big. All amounts A to N they cover here. That's unfortunate with rules. In the new law, there is so much overlap between the rule and the section. The section will tell, same thing will be told by the rule. And the rule will sometimes try to do something that the section has not intended to do. All those shares in respect of which dividends have not been claimed or paid for 7 consecutive years or more. Are you able to understand? All those shares in respect of which dividends. Here we didn't see that. See, you are a shareholder. Mr. X is a shareholder in the company. For 7 years, our friend has not claimed. Consecutive 7 years, he has not claimed the dividend. Then his shares also will get transferred to the IEPF. So I had a case where a gentleman was having shares in a very, very big tire manufacturing company. Huge. He had about, you won't believe, he had 135 shares. If you know the value, 135, 135 shares. Check out the value, if a huge amount. No, not 135, 35 shares. 35 shares. Huge amount. Huge amount. Because the value of that company share is huge. Per share value is huge. Okay. And his father had purchased it long, long ago. They didn't know about it. Later, when his father became very ill, they were taking out the papers. When they saw this paper, they didn't even know it was an allotment advice for bonus shares and even the original share certificates. There were no original share certificates also. It was an allotment advice for bonus shares that they had. And that was that they brought to me and said, sir, what is? He said, hey, come on, you got bonus shares, means the original shares. So luckily I had some contacts in that company. And then I went to the company and verified what he has. Huge, 35 shares, not a small amount. And then we made an application to the IEPF. And then the company confirmed it to the IEPF that this gentleman is. Then the IEPF, then the shares were not even dematerialized. They were in physical form. That too lost. See the problem. So first we had to make an application for recovery of, see, we reported loss and we got duplicate certificates. Then those duplicate certificates were dematerialized. And then the company transferred it to the IEPF in dematerialized form. And then they confirmed to the IEPF that they were now in dematerialized form. So the IEPF thereafter repaid gave an instruction to the company to transfer. So this gentleman had to open a fresh DP account. How they don't know anything. Then the DP account was opened and the company transferred the shares to the DP account. Then later on, the dividend was transferred to the account designated. Huge amount. I was so happy. So why I'm saying it is a good idea. Because see, such a case, They were able to get it. After what, 40 years, and 34 years, they were able to get it. Not even under the new law. It all happened in the old law. They got it. Now, all the resultant benefits arising out of shares held by the authority under clause B. Resultant benefits means bonus shares. Rights shares. The rights you can't, because rights won't, they have to pay, they won't have done. Bonus shares. Okay, definitely. All that, in case there is a merger, they would have got shares in the merging, resulting company. That's a super. That will be a great chain where you have to trace the merger, see who is the new company now, go there, because they would have taken over this from the merged company. All that. All grants, fees, and charges received by the authority under these rules. All sums received by the authority. This is rule 3. This is the main section. Okay, 25, 125. Now, so all income earned by the authority, etc., etc. Okay. Now, what do they do with it? This is the next question now. What do they do? Before we go there, let's see if any questions need to be answered. Mr. Prasad, Amar Prasad, during the session, I will not answer these questions. Maybe at the end of the session, you raise it, or I will try to answer it. And again, I will answer you, but there is no correct answer. It will change from individual to individual. How can I say? Okay, you have to take, keep on writing. But in this case, you don't have to. Don't take running notes from my PowerPoint, because that will be given to you. Already sent to the institute, already uploaded, it is with you. My PowerPoint, you need not take notes. It's readily available. Any other content that you're reading, you have to take notes. Generally, running notes, don't take verbatim, boss. Take it in points. It's a very complicated question you're asking. It's not. First of all, this is not the forum. A. B. It's too difficult to answer. How many questions? How can I say? Well, one chapter will be having huge content. Another chapter will be simple. So how to do? I'll tell you the correct method is go to the past question papers and see the density. That's what I will do. Instead of asking a faculty like me, I will go to the institute material, collect about 20 sessions, then do an analysis chapter wise, and then see the density. Based on the density only, I can decide. So topic where more questions have come, I'll study more. Topic where no questions have come, maybe I'll read casually. That is all you have to do. I hope I didn't want to answer, but I've answered. Don't expect Delphi answers from faculty. See, that expectation is not correct. So how many questions per chapter? 15. Such Delphi, it's called Delphi. Delphi was the oracle. I'm not an oracle. Okay, I can only give you suggestions. Do it. Was even if you don't able to take all the question papers and do what I said, there are other tools available. Go and check in the market. There are excellent tools available which have done the analysis. I will not mention it here in this forum. Go out and check in bookstores. They will tell you. And in your nearest bookstore, they will tell you there are such excellent books. Buy that. And there you will see topic quiz questions analyzed. Our own institute had practice manual. Wonderful resource. I don't know if it's coming out, but if it's there, wonderful resource. Topic questions of the exam arranged topic wise. That's the correct method of doing it. See, can you explain C point? Let me see what is C point. The point is amount lying in unpaid dividend. Let me see what is C point. Which C? This C. Amount lying in unpaid dividend account, boss. What explanation you want for this? See, this is it. Here you're transferring now. After the expiry of 7 years, the amount lying in unclaimed dividend account, that dividend plus interest, you're transferring now. That amount. Is your doubt clarified? I hope your doubt is clarified. It's a fairly clear now. amount lying in the unpaid dividend account. That's it. That is why, that is a fundamental amount transfer. The rest of it is in IEPF section. This is in dividend itself from where you transfer. The tech support team has already put the link there. Please use it. So for that. Generally avoid non-subject related questions during the session. If the session is over and we have 5-10 minutes or nearing 10 minutes of end of the session, you put these questions, it will be easier to answer without disturbing the flow of the class. Please understand where I'm coming from this. It's not for my personal benefit I'm telling. It's for the benefit of all the students. See, one student has a doubt like this. Professor answers. Other students are becoming fools. They don't get the content discussed. They may not want to know the answer to this question also. If they do, then let's go to the end of it. In case they're not interested, they can always walk out of the session. Whereas the guys who are interested can stay there. What do you say? Makes sense, no? Sometimes, these students also, you should control your impulses and learn to. Okay, it's my suggestion to you. See something. See, I was a good scholar. I never relied on faculty to tell me how to study. Sorry, I'm being very arrogant here, but I never relied on faculty to tell me how to study. I rather went to fellow rank holders. So I'm a rank holder. I went to other rank holders who are seniors to me, and I learned from them how they studied. So they are the right people to tell. Faculty can tell, but that will be very generic. A faculty like me, who also a rank holder, can tell. But better go to rank holders because they have an approach. So you 5 or 6 rank holders, or maybe have some online meeting where you invite recent rank holders of the last 2 sessions. Ask them to come. Let them give their experiences on what they studied, how they studied. These questions they can answer relevantly rather than a faculty. Okay. Rarely will a faculty have knowledge of how to write the exam. Can please ask me to understand the limitations of faculty. We are not Delphi, that every question we can answer. Refund of unclaimed dividends, matured deposits. This is what the fund will be utilized for. Refund of unclaimed dividends, matured deposits, all that. I told you now. Complete refund. Okay. The application money due for refund and interest thereon, etc. Promotion of investors' education, awareness and protection. Very, very important. And thereby hangs a tail. So, thereby hangs a tail. See, long ago, in the early 90s, when SEBI had come and NSE had come, there was a huge, demand of investor awareness and education. NSE was doing a lot of awareness programs. SEBI was doing. Associations were there, but still that was not enough. Post Ketan Parekh, people were having very bad experience from the market. So for nearly 2002 to 2004, I should say, nobody entered the market. They were saying market is bad, risky, blah, blah. But then, unfortunately, in 2004, they started entering. Then 5, 6, 7, the market boomed. The story of this market, yeah. Till 4, company shares are going at bargain basement prices till 2002, 2003, bargain basement. Slowly increasing because of the intrinsic value. Slowly that too. And undervaluation was there till 2005. Extreme undervaluation was there. That is, the market was giving low value to extremely good companies' shares. So they didn't realize this. Later, when such shares were identified and heavily intelligent investors and value investors started buying, there's a slight demand, market started going up, suddenly awareness. And also, NSE and SEBI continuously created awareness, give confidence to the investors. Now, the investor associations also were used. But then it was a crying need. And one of the complaints that SEBI and NSE will give is, we don't have budget allocation, we don't have money like that. Then one Mr. Kannan was past president of the Tamil Nadu Investor Association. It's no more. He at that time continuously he was doing civic action. He was continuously demanding all this money that is lying in the unpaid dividend accounts of companies. It's going to the revenue account, general revenue account. That was there. It was going to the general revenue account of the central government, right? Now, first of all, he was the man who said, form a fund like this. And some portion of that money, he said, don't even give me the original dividend, boss. Don't even give me the original dividend. Don't even give me the original money. You invest it in treasury bonds. Interest that you're getting, a portion you give me. He made a calculation and showed 900 crores. And if the interest is calculated, it's much more budget than investor education needs. So that agreed. Then only they formed IEPF and all. The then IEPF. And this amount. So this fund gives a lot of money through SEBI, through NSC. Our institute is also one of the partners. We conduct investor awareness programs, which are subsidized by SEBI, NSE, and other bodies. MCA is also one of the channeling bodies through whom the funds are channeled. Like TIA is a body that conducts. So we used to apply to the SEBI, and SEBI will give us, once we conduct it, we'll send a claim with all the proofs and they give us the money. So, little bit of our administrative cost was also handled this way. By and large, it was meant to promote investor awareness. Distribution of any discharged amount among eligible and identifiable applicants who have suffered losses due to wrong actions by any person in accordance with the orders made by the court which had ordered disgorgement. See, this, for example, Ketan Parekh, he caused heavy losses to shareholders. Ramalinga Rajuna, he caused heavy losses to the shareholders of Satyam. Okay, why? Because of this action, the price of the share plummeted. So these people have a right of, so they can apply. Unfortunately, this provision comes after Satyam. For me, it had come there, but then court ordered disgorgement, and it was done directly. Now, such amounts will be distributed by the IEPF. So you have to go prove yourself as a sufferer, the suffered loss. It's very good investor protection provision. Reimbursement of legal expenses. Incurred in pursuing class action suits under 37 and 245 by members. See, 37, you would have seen in prospectus, class action suits. So if you have a common cause, they can wait. So class action suits are covered. Debenture holders are depositors as may be sanctioned by the trade. Any other purpose incidental thereto in accordance with the rules. So mainly, refund of unclaimed dividend, etc. That is a natural work. Yeah, you took the money, you give it back. There is a clear online portal where you just go and give the data. They send a note to the company confirms it. Thereafter, they credit the amount or they transfer the shares to you. They have a DP account where they keep it in common. Once you prove your claim, they transfer the shares to your DP account. That's simple as that. This promotion of investors is another important. There's something about utilization. As I told you, under the old Act, there was a 205C of the old Act. There was an IEPF. Now, suppose somebody had, at that time, the money had been transferred to the old IEPF. You have to give the money to him. Now, you can't say old IEPF no longer there. No. That IEPF fund only gets transferred here. Amount in IEPF, and that amount only gets transferred here. The new IEPF. Okay. And that once it comes there, you can claim. If you are a person who has not been paid dividend, you can go any time. Even there is no barring of limitation. No time limit. Any time. As I told you, it's almost 30 years and all, 25 years, 30 years event. They were able to. Any person claiming the amounts mentioned above may apply to the authority constituted for this purpose. That's nothing but IEPF. When they use the word authority, you have to be a little careful. See, Let us understand. What is the IEPF? It is a fund. Now, fund is nothing but money. Money is kept somewhere, like a mutual fund. Now, that fund has to be monitored and administered. That is the authority for administration. The authority for administration of the fund. So you can, I'm not, see, don't make an immediate comparison and trouble me, but to help you understand, I'm saying, see, every mutual fund cannot operate on its own. The mutual fund is set up by a bank or by a NBFC or whatever, licensed by the SEBI, but it cannot be functioning on its own. It needs an expert group of people to monitor and control. And that body, that there will be three levels now. Operationally, the fund has to be handled on a day-to-day basis. Then somebody has to supervise this, and there will be one group of executive management. And finally, there will be a broader board. So this is called asset management company. So Franklin Templeton India has asset management company. It has many funds. Each fund is handled. The AMC is Franklin Templeton India asset management company. They will do it. See, this is an example. The authority for administration is not an asset management company, but it is the company that manages the fund. So they take the board takes broad decisions, such as what type of investments to invest, what type of what to do, etc. Whereas there are employees under the CEO who will handle the day-to-day running. Investing the fund, repaying the interest, all that will be done by a battalion of employees. So the IEPF authority is a body, it's a board, like a board of directors. It has a president, etc., who is called the ex officio chairman. Ex officio means he is not appointed as chairman of the IEPF. Once somebody becomes secretary of the Ministry of Corporate Affairs in Delhi, the gentleman or lady automatically becomes the ex officio chairperson or chairman of the IEPF. Then there are minimum 6 to 7 members of high reputation. We'll see what their qualifications. Then there will be a CEO who will be the convener. See, the fund, the authority takes the broader decisions, right? The authority takes the broader decisions. Then the authority takes the broader decisions. Then it is implemented by the CEO and his team. So the CEO is not a part. He is the convener. He is there to listen, give inputs, provide it. Of course, he will not do it on his own. He will be having people to help him. But the idea is he should answer questions raised by the guys. So the fund will talk about provision of required resources for administration, IEPF authority to work in consultation with CAG. The IEPF shall be competent to spend money out of the fund for carrying out the objects specified. The accounts of the fund shall be audited by the controller and auditor general. These are all pure theory. These are all pure theory. Some points. So just like any other body, the accounts of the fund also will be audited, but it can't be audited by a member of the institute. Because this is the government fund, central fund. Therefore, it will be audited by the controller and auditor general of India. And every year, the auditor accounts together with the audit report will be forwarded by the authority to the central government, which is in this case the ministry. Thereafter, the IEPF authority will also publish an annual report that will also be forwarded to the central government. Wherein they'll give data on statistics, how much interest was paid, how much shares were transferred, statistics, and any major decisions, how many investor education programs are conducted, which were the body, that. So the said report, together with the audited accounts of the IEPF and CAG's audit report thereon, shall be placed by the central government before both the houses of parliament. See, central government in this case has no role because the IEPF belongs to the public of India, the people of India. Right? Its administration cannot be a secret. Its administration cannot be a confidential matter. Therefore, its functioning should be known to every individual citizen in this country. Now, I cannot go around sending mail to every individual citizen in this country. But don't forget, the parliament is nothing but, the Lok Sabha at least, is nothing but representatives of the people. So, when I inform the representative, I inform the gentleman. So, who sit in both the houses of parliament? The Lok Sabha, elected representatives. Rajya Sabha, appointed representatives, nominated representatives. So, all of them will get a chance to see it. Maybe they will even comment about it. So, there will be a discussion in the parliament and then it will be tabled and voted. Thereafter, it becomes a part and parcel of the public document of India. Anybody can go and have a look at it on the online site of the Government of India. That is why many cases you will find this type of accounts, etc., of a fund or the various, even for NFRA, we will see that. Later on, when we come to NFRA, we will see that. So that's again an authority, a National Financial Reporting Authority. So that will be placed before both the houses of parliament and become a public document. Now, this is a nice section. It may be difficult to understand, but I will try to explain it very simply. Normally, we already saw that when dividend has been declared or rights or bonus issue has been announced, a record date will be announced for listed companies. We also saw that only those shareholders whose name appears in the register of members on the record date are entitled to dividend acceptance. Now, 126 contemplates a situation where the company receives instrument of transfer of shares, usually forwarded by the transferee of the shares for registration of transfer after announcement of the above benefits. So this guy is sending it after announcement. Okay. There is a dispute or some issues he's raising and he says, I couldn't send it, whatever. He says, genuinely it was delayed, I couldn't do it, whatever. So, whatever it is, okay. When there's a dispute in the ownership of shares. See, friends, I'll tell you how it is. Today, this section has really lost its meaning. Why? Because once you use a depository participant, a DP, right? You buy the share before the record date. T plus 2, it has to come to your account. T means transaction date. 2 means 2 days. So T minus then next day, the next day. So if I buy the share today, tomorrow, day after, it has to come to my account. If it does not come, the broker will be in trouble, the DP will be in trouble. So which means how it can happen roughly. I purchase the share one day, next day record date. Day after it come to me. So I am technically the owner before the record date. Because on that day he took the money and he sold it. So technically the sale has happened. But delivery happened only 2 days later. So in that cusp, I am caught. This is one example. Or somebody might have got a stay on some shares and said no thing will be done on these shares. So any claim of dividend, etc., will be kept in abeyance. In case any instrument of transfer has been delivered by a shareholder for registration. Also, as you might have seen in allotment and transfer of shares, it is still possible that some companies will be operating with physical shares. Now, in physical shares, there will be actual physical delivery of the certificate together with the instrument of transfer. That's where the problems will start. So I didn't get it, it came late to me, like that. And but then he will say, I sent it, you have not registered. Now, in those cases, the company should transfer the dividend to the unpaid dividend. It should not pay it to the existing shareholder. The company need not transfer it if it is authorized by the registered holder of such share in writing to pay such dividend to the transferee. This is called mandate form. See, if the gentleman is intransigent, now what he'll do when he is buying the share on 1 day before, 2 days before delivery will be 2 days later, 1 day after tomorrow, and as the record date is coming in between, he will inform the seller, the DP of the seller, and who will say, I also want a mandate for the transfer. Meaning, As on the record date, I am the owner and I need the dividend. So if that is so, they will give the mandate to the transfer. Especially if the purchase is come due, they may give the mandate. No. But and whatever it is, they once the shares go into this dividend goes, those shares are also locked. Any offer of right shares and any issue of fully paid up bonus shares will be kept in abeyance. Now, we come to a very, very important section, which is punishment for failure to distribute dividends. Friends, the earlier penalty was for non-compliance with unpaid dividend proceedings, not transferring it, etc., etc. This is failure to distribute dividend. Hope you got the difference. I declared it, but I failed to pay or post a dividend warrant within 30 days of declaration of dividend to the entitled shareholders. This is a very powerful mistake. Earlier, in the earlier section, penalty, we didn't see any imprisonment because in 2020, they decriminalized the Companies Act. So merely procedural issues like not transferring and all, there is no criminal intent. Assuming. So they said no need for imprisonment. Punishment will be there. Penalty will be there. But here, you declared it and you jolly well knew that you had to pay it within 30 days. So you should not, it's a criminal act. Fraud. Therefore, they say for the period of default, you pay interest at 18% company pays. Company cannot be imprisoned, right? Therefore, every director will be imprisoned up to 2 years if knowingly a party to default. Who will prove that? You will definitely ask me a question. Sir, how do we know he was knowingly or not? See, suppose if you are intelligent, what you should do, you are a director. You want to prove that you are not knowingly a party, then you should send a mail to the board of directors clearly saying, I resign from the post of directors. 1, we have declared the dividend, etc. And I come to know that even after 20 days, we are not making any arrangements for payment of dividend. Therefore, I inform you that this is a offense which involves imprisonment, etc. And I hereby resign from the post of director. And also send a copy to the registrar and get after it. And now nobody can play games after that. But who will have the guts to do this here? Which director will have the guts to do it? But if you have, then you can. If you are independent director, need not, because later on when you come to final syllabus and do it under self-paced module, you will understand that independent directors are have immunity. Other than that, everybody has to suffer. 2 years is not a joke. Be very careful. That is why I used to tell my students, in fact, in a recent orientation GMCS class, some student was there who had attended my regular lectures. He has cleared the intermediate and he was there. So I was talking something about pro notes and all. Immediately said, sir, you have warned in the class that we should not sign any pro notes. No chartered accountant should sign pro notes or anything. So once you become a member in practice, better avoid pro notes. Unless it's especially pro notes. Also, don't give any guarantee to anybody. Borrow, but borrow it very conventionally rather than unconventional borrowings. And never give guarantees. It's a very powerful thing. Never give a guarantee to anybody. Okay. And for information. So one more thing I'm telling is, try to avoid becoming a director of a company straight away. Unless the company should be extraordinarily corporate governance. Extraordinary. Such company will if they appoint you, then don't. Even then, make a check, hire a company secretary to make a study and give you assurance whether this company is a worthy company. Because the consequence of directorship initially may be very nice to say, I'm so-and-so company director and all, but the provisions of the Companies Act are very stringent in terms of penalties. Of course, monetary penalty is 1,000 for every day of default. I'm not saying that is less, but I'm saying the imprisonment is included here. And also, you are able to see one more thing. And is very significant. Later on, you will understand what is compounding of offenses. Now, under the Companies Act, you are entitled to compound an offense, meaning instead of prosecution, instead of going to court and getting convicted or even acquitted, get convicted. You know that the company directors know that they have committed the offense. After all, 30 days has gone and you're not paid it. You can't say I didn't know. How can you say I didn't know? 30 days gone. So you have done it. Now you have to be penalized. So 1,000 rupees plus there'll be a compounding fee also. So you can go to the compounding authority, which is either the regional director or the tribunal, and get it compounded. Meaning they would ask the central government to withdraw the prosecution, if any. You can do it before the prosecution proceedings or even during the prosecution. Obviously, you can't do it after you're convicted. So during the prosecution proceeding also, you can decide. Which is why central government authorities, both income tax, direct tax, indirect tax, everybody will give you enough opportunity for compounding. They will say, if you want to compound, come, I'll help you. That's the best help I can do, they will say, because you've done the fault. Now, how to? So this is one thing. So, point here is this, but the problem is, if you want to compound an offense under the Companies Act, it should not have imprisonment at all. Imprisonment, simpliciter, or only imprisonment, or imprisonment and penalty, fine. So once the and fine is there, automatically this becomes a big, it's not possible to compound. That means the gentleman has to appear before a court and stand before the court, be convicted, maybe go to jail, whatever. Check it out. So that's why we say, be careful about this. This is a very peculiar provision which uses and. Whenever we are giving example in compounding for offences involving fine and imprisonment, mainly we give this provision only, where it has and. Nowadays, they have removed imprisonment from most sections. Decriminalize the Companies Act. Therefore, you will rarely find imprisonment or fine or imprisonment. Only these sections are there where it's either imprisonment or imprisonment and fine. Okay. Not compoundable. So technically today, if imprisonment is involved, it's not compoundable. I mean, I'm not making a general statement by and large. Now, can I escape punishment for failure to distribute dividend? Is there a defense available to me? Can I claim any defense? Can I say, this is what happened? So how can you say I'm liable? So you can. One is, dividend could not be paid by reason of operation of any law. For example, the company is a foreign company outside India. Okay, there are certain FEMA violations or whatever. So expatriation of the dividend is not possible by under FEMA. So unless they get an order from the RBI, you cannot have it. You hold it. This is one reason. Any law. For example, there might be a law saying certain type of individuals classified cannot take the dividend in. Whatever they might describe it. So anti-corruption laws are there. Shareholders gave directions regarding payment of dividend. See, a shareholder can give specific instructions, like he can say a registered post, but then he has to pay the money for that, even if he has given certain specific instructions, which we have to comply with. Those directions cannot be complied with, and the same has been communicated to you. Friends, this particular defense today is not available to listed companies. And even in fact, nobody, because all shares are not dematerialized, you need a DP account, the bank account is there. So he cannot give any special instructions. Jaliwal has to take it in his account. This provision is there from time immemorial in the law, therefore they've not taken it out. But today, very rare for this to be invoked. You cannot do this because you are supposed to transfer it to his designated account. If you do that, no problem. You are not done it. Whose fault is that? Okay. But if you have sent it and his account is frozen and it comes back, that's not your problem. Then you transfer it to unpaid account and that's it. Dispute regarding right to receive dividend, like this. When there is some dispute, you keep it in abeyance under this section 126. Then you can always say, I'm invoking 126 and keeping it. No mandate has been received, therefore. Dividend has been lawfully adjusted against any sum due from shareholder to company. In case there is any amount due, genuinely due, you can adjust it. for any other reason, the failure to pay or post dividend warrant within the prescribed time was not due to any default on the part of the company. See, there was a huge, let us say, calamity. All servers are down. Every server is down. In my server, every server, DP server, NSDL server, CDSL server, everything down. Bank servers. Almost whole got proportion. Then only you will not be able to do something like this. Default. Not due to default, my default. That means should be. Because even assuming that you take a pandemic situation like Corona, servers are all working. Online payments could be made. There was no prohibition for making online payments. And work from home culture was encouraged. Even then, suppose Corona lockdown came, for first 10, 20 days, they said never go out, don't go out. Now, in those situations, nothing can be done. Our Prime Minister, enlightened Prime Minister, has told, don't go. And then he has told, don't go, why you go? So if that sort of reason is given, so once the Corona panic's controlled, we were able to enter the office, we wait. That is all. Like you have to give a reason. See, I tell you, these are the law. Writing a submission for dropping of a prosecution proceeding is an art. You should justify the action so that the authority can willingly drop. But here there is no drop. Straight away imprisonment, non-payment of dividend. Okay. PQ Limited declared and paid 10% dividend to all its shareholders except Mr. Kumar, holding 500 equity shares, who instructed the company to deposit the dividend amount directly in his bank account. Company accordingly remitted the dividend, but the bank returned the payment. Number as given by Kumar doesn't tally with the records of the bank. See, this must be an unlisted company, PQ Limited, an unlisted company attempting to pay to a bank account, which is number is wrong. But be careful. The company, however, did not inform Mr. Kumar about this. And the same has been communicated to him. I didn't stress it at that time, my mistake. So the shareholder gave directions regarding payment of dividend, and those directions cannot be complied with, and the same has been communicated to him. So PQ Limited cannot be a listed company. It has to be an unlisted company with about, say, 200 shareholders. Kumar is one of them. He said, send it to this bank account, and he gave a bank account specifically. To that bank account, you have to send. I said, I sent it, but the account was wrong. But it was not communicated to Mr. Kumar. It's important. Now, will they be liable for failure or not? Maybe you could. See, yeah, it can. If Mr. Kuldeep, if you are a debtor, means Mr. A is a debtor, and also a shareholder eligible for dividend, then then the company can adjust it. Okay. That's what they mean. This is legal debt. It's all of you are agreeing that it is liable. See, in the exam, you cannot write one word and escape. You can write 5 lines. Okay? How to write? That I can teach you. How to write? How to write an answer in the exam? I can teach you. See, basically, you write the facts, but briefly and represent. You don't have to bother about 10% dividend, 500 equity shares. You need to know PQ Limited, Kumar. You put it this way. Mr. Kumar gave a specific direction to PQ Limited regarding payment of dividend to a specific bank account. But as the number was given wrongly, the payment could not be effected. But the company did not inform Mr. Kumar about this discrepancy. You might ask me, why should I repeat what is there in the question? If you do that, in your own words, the examiner is impressed. Because a lawyer, while presenting a plea, will represent the facts to suit him. So to suit his conclusion. See, the facts are huge. Out of that, you have to cull out those points that are in your favor and will help you and put it. So these 3 sentences together reach the unerring conclusion that the company is liable. Now, you write this section. Normally, when there is a failure to distribute dividend, the company and every officer are liable for etc. etc. But one of the exemptions is that the shareholder may give directions and which the same should have been communicated to him, which means you have written the law. So you gave the facts and then you wrote the law. And then finally you write the conclusion. Therefore, Mr. PQ Limited is liable under the penalty, section 127 penalty provision. Of course, for 2 marks, should I write so much, I will ask. In which case, I will write 2 lines. 2 lines I will write. How? Company cannot be made liable for failure to distribute dividend if the shareholder gives specific instructions which cannot be complied with, provided the information is given to the shareholders. The same has been communicated to him online. In this case, PQ Limited has not communicated this discrepancy to the Mr. Kumar. Therefore, they are liable under section 127 for the penalty. 2 marks straight away. Okay. In the case of Nidhi companies, in case the dividend payable to a member is ₹100 or less, if declaration of dividend is made in local language in local wide circulation, and the announcement is also displayed on the notice board of the Nidhi for 3 months, for less than ₹100, I told you, one share, now they'll give ₹10, ₹100, ₹20. So those items need not be sent. You can debit, credit is SB. Simply make a declaration and leave it. This is an exemption available to Nidhis. Friends, we have come to the end of the topic, but questions are there. Let me take it. If you have further questions also, you can ask. Company has ignored for the benefit of the shareholder. What is that, sir? I'm not able to understand your question. Yeah, in this case, when it's only 2 marks, Mr. Mishra, you can escape facts. But when it's 4 or 5 marks, the facts are more complicated. See, here, facts are open and shut. But when the facts are a little more complicated, then you might want to write facts also. Generally, the pattern is facts, law, apply the law to the fact, conclusion. Fact, law, apply the law to the fact, conclusion. If written in this format, or even if it's 2 marks, then law, apply the law to the fact and conclude in 2 lines. 4 marks, little bit of fact, law, very clearly, apply the law to the fact, conclude. 6 marks, elaborately discuss, because that will be complicated. Rarely you get a 6 marks question would be theory come problem. In this case, you have to write a lot of theory and then give a conclusion at theory. So there will be theory, a lot of theory will be there. You have to write it and then apply and then conclude. What is mark weighted? Which slide was? Mustafa ji, which slide? Not able to see it in my slides. Not able to remember anything like this. Can you help me with giving a little more clarity on this? Yeah, but I'm not able to see. Where is it? I don't have it with me. That's why I'm asking. Give me a context and I will give you a reply. Seriously. Mark weighted. I need to take out the material. If you can give me the page of the institute material where this is there, I'll be much obliged to you, sir. Otherwise, I'll have to decline to answer because I'm not able to connect it with this topic. Please help me. You just give me the page number in this lesson. I will go there and I will see and I will explain to you. Okay. Correct. The Kumar case, company has ignored to pay dividend to Kumar for the benefit of Kumar, like in order to secure response. No. There is, it's okay. But they are liable. They are liable. That's all. How can I say, sir? Oh, you are asking marks weighted. Okay, I was thinking you are telling some technical point in dividend. There's nothing like that in dividend. Sir, again and again I'm telling this one. Just before you, I was conducting a 45-minute masterclass for company secretaries. Told them also, I'm telling you also. No faculty is a Delphi. No faculty can tell you Exactly. Suppose I were to tell you 4 marks. Am I a Delphi? Am I an oracle that I can mind? They may ask you 6 marks, 2 marks. So my suggestion, don't go by that type of calculation. Or if you want to do that, you can do it by yourself doing an analysis of the density. So no faculty. In fact, if I do the analysis, I can tell. And I stopped doing that analysis long ago. Once I started teaching at our institute, BOS, I stopped doing it. Private classes, I used to give even questions. I used to give 36 questions that will come. Out of that, 40% will come. 40% of the marks will come from that question. How I did it was, I can tell you. I used to go to the past question papers, not through a faculty. No faculty, I went and begged. I did it myself. And thereafter scanner. See, when we did CA in 1987, there was no scanner and all. So we used to take 20 sessions, session answer, and then take a large thing and we will, ABC, I mean, density. Okay. You go to scanner, they will do graph and all they will do. You see that. They will do graphs, bar charts. Superbly they will do. So that gives you a broad feel. Even then, nobody can predict. Okay. Least of all me, when I'm covering a session for the Board of Studies. So I can't do that. How can I predict it? So, but it's not difficult, Mr. Mustafa. We have done it in the past. Right? See, sometimes students think everything they can ask the faculty and get it like laddu in their hand. I'm not only blaming you, sir. I'm the general trend of the student community, I'm telling. Nowadays, students are they come with the arms and say, put it in my hand. Whereas in those days, faculty came, taught the subject and went. Later, there was a little burden on people like me, and I, out of my own interest, used to do an analysis of the past 10 question papers and then do some analysis and come out and say these questions. Yeah, there's a pressure on the faculty, I can do it. I'm telling you, I have predicted the questions, but I stopped doing it, guys. Don't compare me with the other faculty. In my peak, I used to tell what question will come. Okay. Now I stopped doing that. 4 marks or 2 marks, 4 marks, maximum 4 marks, in this topic. But I'm again and again saying, I hate giving fish to a person. I like to teach him how to fish. That's my philosophy. I hate giving fish to a person. Because if I give you fish today, tomorrow who's going to give you the fish? But I'll teach you how to fish. That's more important. I thank every teacher in the past who taught me how to fish. I'm independent now because of them. Instead of making me spoon feed and be dependent on. That's my philosophy. In that sense, I'm not ashamed that I'm not giving you like other faculty. But this question is not a difficult question to answer. 4 marks, 2 marks. Okay, are you happy? That's not matter. Chalo. Now, I'm happy, Mr. Mustafa, for your kind comments. And I really thank you for the nice words you have told. But kindly understand. And this is a broader general suggestion to all of you. See, CA is a tough exam. Don't underestimate it, thinking that it's like a university exam where somebody can help you to pass. No. You have to do a lot of homework. You have to do a lot of self-study. You should be prepared to work on your own. Every day you should allot 10 hours nearing the exam. 8 to 10 hours, not more than that. 8 to 10 hours distributed over topics, distributed over subjects. Every day you should study 4 subjects. Find rotation, you should go. The timetable should be there. It's not easy, Mark. It's not easy. Self-study is where the action is. These classes can only give you the inputs to you. Thereafter, self-study is where the action is. Self-analysis of the question paper. Then what happens? Now you will understand. Hey, this question has come. This question has been repeated 4 times. I don't know it. You will study it. Like that, your knowledge will improve. Just believe me when I say this. When you see a repeated question and you don't know the answer correctly, you will read it and you will become thorough. So luck is there, it comes in the exam, you will write it and go. See, this is the method. This is my suggestion to all of you. Fantastic. My dear friends, the time is 7:30. Don't worry, I have a lot of work for you. It's not that we are going to stop here because I have multiple choice questions that have to be answered. But before we go to the multiple choice questions, allow me to take a small break for about 5 to 10 minutes. Okay, 5 to 10 minutes. Thereafter, we will go for MCQs. We can answer, we can discuss further on our subject. Right. So small break, sir. Welcome back from your break. Now, some of you are asking me questions. I was also a little thing. It's like this. In law, it's not number of questions. Don't think in number of questions in law. Because, see, in accountancy or in costing or in other papers, income tax and all, there will be problem-oriented questions in maximum. Theory will be less. So there I can tell you, debentures, if you want to understand very well, work out 10 problems, 15 problems. So you may have to look for it beyond the institute material, go to some popular textbooks and get it. Prepare yourself. So institute material, one or two one popular textbook, and institute guideline answers and the suggested answers. Ask question papers. So together you have about 25 questions you can. Like that we can say. But in a theory paper like company law, you cannot say number of questions you have to study. Rather, we can say number of topics you have to study. Important topics. Each chapter. Like in this case here, the due dates for transfer of dividend, important, regularly tested. Then you know itself now. What is that? Before we conclude this session, I'll tell you. When we give in law paper, we don't give number of questions. We give what? So what is important? When interim dividend can become idiot. So calculation of the rate, very important. You have to read. This is not important. Okay. What is the rate at which interim dividend will be? Because there's a condition there. Maximum, they might ask you to see, they might ask you to remember that interim dividend once declared has to be transferred within 5 days. Then transfer to reserves. There is no need. That is the point we have to remember. That this is what they have asked once. So this is important. Then transfer of declaration of dividend out of free reserves. Very, very important. Very, very important from the example. Note it. When I'm saying if you note it. If you're saying number of questions, I'm giving you important topics. Out of that, questions will come. This is very important because they might ask you to remember that relating to accessory deposits, dividend not paid or claimed within 30 days. Okay. And 7 days, 90 days, 7 years, all that. IEPF is not very important. This is a question asked in the exam, maybe repeated. IEPF, not important. Very theory. We generally don't ask you. Okay. Generally, see, the institute does not ask theory questions in law. They ask you only problem oriented, or they give you a situation and ask you to write the theory. Kept in abeyance, 126. Remember it. Very important. If you identify it, please remember to write it. Failure to distribute penalty, that will be combined with this. So roughly we are having about 6 important areas now. These areas be thorough. Go through the exam questions. That's all you have to practice. So in a way, I have answered the question that was put to me. Instead of saying number of questions, I'm saying number of topics. So I'm saying about these important topics, 6 of them, 6 or 7 of them, be thorough. Okay, now we go to MCQs. Let's see if you have anything to say. Yeah, not now. I will cover it. We'll start it in the next class. Right now, we'll go for MCQs for dividend. I'm going to go for MCQs for dividend. So we have to cover MCQs also. Yeah. So you can give me the answers. I won't give the answer. You have to give, and then we'll see whether you're right. Form numbers have to be remembered. I already mentioned it in charges. Form numbers have to be remembered. Section numbers not set. Form numbers need. Beautiful. Beautiful. All of you are getting it right. D. Wow. D is right. D. Next time, from now on, don't forget to give 10D like that, if you can. Yes, D is the right answer. Too easy now. Just to reinforce, to ensure that you don't forget it. Beautiful. 11B. E. But some are saying D. See, some are saying D. What is the question? Maximum time within which dividend must be paid after declaration. Paid. That is 30 days. Correct? Some of you have confused it with the time for transfer. 30 days is correct. B. Most of you are B with a few Ds. Two Ds, and they have corrected. Dividend can be paid in cash, in kind. In kind. So, if you are a company manufacturing chocolates, you give chocolates instead of giving me. Just send a hamper. I don't think so. You can't do that. Issue of bonus shares. See, what they are trying to do here is there are two types of dividend: cash dividend and dividend by issue of equity shares. In fact, in those days, see, today you have a separate section for issue of bonus shares. In the old law, there were only two sections that spoke about bonus shares. And they were not empowering sections. They were merely conditions elsewhere. For example, the usage of security premium account, you will find issue of fully paid up bonus shares. And in dividend, you will find, okay, dividend should be paid in cash except dividend by allotment of shares. Okay. So that is kind of dividend, is the point. So if you had written A, then maybe it's my mistake for not having alerted you. If you have written B, so some of you would hover between A and D. Some of you are saying B. That is a little surprising. What is kind? Kind means instead of money, you give it in things. Payment in kind. So in ancient times, you'll find in the Bible, the people who worked in King Solomon's temple were paid in corn, wine, and oil. So that's in kind. They were not paid money. So they were given corn, wine, and oil. It was kind. You can't pay dividend in kind. Kind is not exchange. Kind is, instead of giving payment, we give something. We give so that is kind. Dividend cannot be written. Both ANC is correct. And suppose you had selected A, I wouldn't blame you. Sorry, A is the correct answer. Okay, even I got it wrong. I thought it is D. Dividend can be paid only in cash. Okay, not in by issue of bonus shares. But for information, issue of bonus shares is one kind of dividend. But it is not cash dividend. And dividend, as it is under this chapter, can be paid only by cash. I'm sorry for confusing you a little here, but remember, why not CR? By issue of ownership. That's because, I'm just telling you, in this chapter, they say dividend can be paid in cash or by check or by transfer of money. Correct. Only that is covered in this chapter. So only in cash. So out of that, only in cash is here. Correct? That's all. So if you really want to go there, here they say dividend can be paid in cash, check, warrant, or any other. Today we don't use warrants. We use electronic mode maximum. Cash or check. Cash also, because of the prohibition under the Income Tax Act, we can't pay cash. Though the Companies Act permits you to pay in cash, there is a prohibition under the Income Tax Act for payment of dividend in by cash. Okay, so that we don't pay. So bonus issue, yeah, there should be a definition of dividend here, to my knowledge. Yes, but generally you should see whether the definition is exhaustive. Exhaustive. If it is an exhaustive definition, then you should prefer to not to go for guessing. Sorry, I made a little confusion in this chapter, in this question, because I said bonus is also a kind of dividend. It is not. Issue of bonus shares is not dividend. It is only one method of rewarding the shareholders. See, the general reserve can be used for paying dividend. It can also be used for issue of bonus shares, but that's not a dividend. Fantastic. Beautiful. Let's see. Warrant is like a check with pre-printed. Check is normally written out now, whereas a warrant will be pre-printed. And the banker, normally in a check, you don't inform the banker about the check. You write it out and you give it to the person and he presents it to the banker. In case of a warrant, you will give the list to the banker. And the banker will keep track and their warrant numbers and all that. And then the warrants will be pre-printed and posted to the shareholders. This was done in those days because you can't go around writing 1,000 checks, 2,000 checks now. So they will pre-print the dividend warrants and then there will be some blanks where we'll use a computer program to type the amount, etc. Only the amount and folio and all. So those days, yeah. Now it's totally gone. Why should I do all that? Unfortunately, the Companies Act still uses certain old terms that are no longer relevant, like warrant and all. Nobody issues warrant. Why should they? Printing cost, etc. Today we just prepare a list of members who are entitled, their folio number, DPID, PAN number, blah blah blah. One Excel spreadsheet, and then attach it, send it to the bank. Next day or minute, every account will be credited. So I should be bothered. That is electronic. So A is the correct answer. See, registered shareholder, very definite. Beneficial owner, who's not mentioned in the depository, but who's informed, let's say, the beneficial owner. See, there will be a beneficial owner and a benami. Beneficial owner, whose name is mentioned in the depository, legal representative of a deceased member, once they inform, they are entitled. The official receiver or assignee, all of them. Beautiful. Beautiful. Fairly simple question. Doesn't tax your. Nobody has a doubt about this because you're all quite familiar with accounting provisions. So this is well known to you. A for 14 or A for 13? I think you're in 13 answer. 14 is D, straight away. 14 is D, all of the above. Cannot be used. CRR can be used for issuing bonus shares, but not for paying dividend. Securities premium, that is what, when we transfer it to CRR, we lock it to prevent using it for payment of dividend. Securities premium, specifically 5 matters, the dividend is not included. Share forfeiture account cannot be touched. If at all, at the end, when you reissue it, there's a capital reserve, you can use it. You can keep it. It can't also be used for declaring dividend. Capital reserve cannot be used. All of the above is the correct answer. CRR also cannot be used. I'm sorry. So sorry, I went to the last. You have more questions to answer. So in case I finish it a little early, these questions are, I will take up accounts and try to begin it. Because dividend is a fairly simple topic. 2 sessions were given. We have some time spare. So we'll use it. We try to answer all these questions. We still have about 15 minutes time. I will introduce you to accounts of company. Very, very careful answer question you have to be. Suppose I had put 5 days here, you would be really confused. Interim dividend. Oh. There's a perfect mix of alphabets here. B, A, some are D, even one C is here. Let us ask computer chief. That is easy enough. Those of you who gave B, how many of you gave B? Quite a lot of you have given B. See, where is the confusion? 15 days is nowhere. 60 days, nowhere. You are never studying. 7 days, you might get confused, but don't. 7 days is what? Again and again, you're making that mistake. 7 days is transferred to the unpaid dividend account. Please remember that. Some of you seem to be still confused. Payment is different from transfer to the unpaid dividend account. That's about interim dividend must be transferred to the unpaid dividend account within, I can't simply say 7 days. 7 days of expiry of the 30 days from date of filing. So that's why we are not asking that question here. It's very complicated MCQ. Because interim dividend is not from any particular day. It is from the expiry of 30 days from the date of declaration. From the date, last date, from the 30th day from the date of declaration, within 7 days, you have to transfer it to the unpaid dividend. So 7 days. There's one more provision here. That is, once interim dividend is announced by the board, it has to be transferred to a separate unpaid dividend account. We saw that within 5 days. That's different. Idea is to protect it, keep it separate, and to pay. For payment, it is not 5 days. For payment, it is 30 days, like any other dividend. Once dividend is declared, whether interim or final, it has to be paid within 30 days from the date of declaration, either by the board or by the shareholders in general meeting. Please try to remember this. But those who answered, see again, Ria Kareka, there are two different sevens. From the expiry of the 30th day, which is the last date for payment of dividend, you have to transfer it to the unpaid, unclaimed dividend account within 7 days. It will lie in the unpaid, unclaimed dividend for 7 years, 7 long years. On the expiry of 7 years, it has to be transferred to the IEPF. Even before I could give an answer, Mr. Sangeet Vani has given an answer. Thank you, sir. In fact, your question is clarified here, Madam Riya Ji, by Sangeet Vani. So that means that he knows, for which I congratulate him. And he has written it very correctly also. So don't get confused. 30 days, pay. 7 days, transfer. 7 years, wait. Expiry of 7 years, transfer to IEPF. No. Interim dividend, declaration. Within 5 days, transfer to unpaid dividend account. Then from there, you pay within 30 days as you should. Which is the answer for our step. I think this MCQ seems to be working out well because many of you seem to be having specific, really serious doubts in the topic. And see, how many questions is one thing? Important questions is another. This is an important area. You should never make mistake here. This is something we discussed in a slide. Board may declare interim dividend out of. See, if you have the institute material with you, you can look at it and answer. Nothing wrong. See, after all, the purpose here is not to test you, to ensure that you remember. The idea is to reinforce our learning and also in a way to test you. Everybody got it right. Everybody got it right. Everybody got it right, except one person who got B. Profits of previous year, profits of current year up to preceding quarter. So this is for interim dividend. Interim dividend. Okay? Check out interim dividend. Alag na? Interim dividend alage, final dividend alage. Final dividend can be declared out of reserves also, provided you comply with the conditions. Generally, it cannot be used. Only if you comply with the conditions, you can declare. 16D is the correct answer. Absolutely correct. 48 is the correct answer. Tricky. Because there is something in C which we have not discussed. Don't worry. Again, if you know the sources from which dividend can be declared, then you can. dividend cannot be declared. Please note the question also. Okay. Actually, we have discussed the subsidy. The name used is subsidy. We have discussed it. Let us see. How many of you give the right answer? Navneet Maurya, super, 17A. I don't know if it's correct, just appreciating you. Government grant, that's what they mean by that. But let's see what the correct answer. Let's see. See, I already mentioned to you that there is a commandment. Dividend cannot be declared out of capital. Okay. But if such capital profit, please understand, out of capital, that is out of share capital, or in any way out of share capital. That is why I showed you how depreciation becomes very, very important. If depreciation is not declared and dividend is paid, to that extent, there is a payment of dividend out of capital. So I told you. So of course, see, those are all esoteric explanations given by me. That is not important from exam point of view. If you really seriously want, you might ask me, sir, if it is not important from exam point of view, why are you teaching? See, don't be students like that. In those days, we used to listen to our teachers when they told us, because the idea here is not to pass the exams, to become meaningful and complete chartered accountants who are well-rounded. Okay, that is our goal. Dump and vomit university course is good enough here. Why you went to waste your time with CA? So capital profit realized in cash, allowed. You can declare dividend. Yeah. Subsidy is nothing but government grant. That subsidy word is used. Basically, it's a government grant. So when the government gives a grant for payment of dividend, that can be used. So see, okay. None is not a right answer now, because it cannot be declared out of capital now. So when A is there, D cannot be. See, you should 100% know that A is not possible. Your doubt will be only in B and C, which means D definitely out, because capital is there. Capital profit realized in cash, I mentioned to you. It can be used. For example, I mentioned 2 times. When you sell an asset, realize. Subsidy is nothing but government grant, as rightly. So few of you have got it right. We can't declare from capital. That is the correct answer. A is the correct answer. Actually, the question contains the answer. Actually, interim dividend is not declared by the board. Though the word declared is used, I would humbly submit that it is announced by the board. It's a risky decision that the board is taking, because finally, including the interim dividend and any final dividend, they will recommend it to the shareholders at the AGM. This is one of the ordinary business. Okay. At the AGM, the shareholders will declare. Okay. That is the answer. Shareholders in AGM. The correct answer. B is the correct answer. Registrar, Mr. Aditya, come on, yeah. How do you get registrar, yeah? Hey, come on, you're making fun of me, Aditya. That means that whatever I taught, you have not listened at all, yeah. Did we mention registrar anywhere in this? Hey, seriously, I want you to give me a reason. How do you say registrar? Where do you find registrar? Register is given. You understand? Please, huh? Don't make this mistake. Okay. Those of you who got A are confusing interim dividend with final dividend. See, the clue here, my dear friend, if at all you're going to be very particular about it, is the only. See, board recommends the dividend, but declaration is done by board only. No. Once they recommend, it is declared by shareholders. Interim dividend, they don't declare. Technically, it's not declared. It's announced by the board and paid. Once it is announced, it has to be paid within that. That's why they say. That is why the definition of dividend says dividend includes interim dividend. Okay. Now, many of you, sir, it is shareholders' money, na, sir. The shareholders come fund now. How the board can? So the board recommends the dividend. If the board is very confident that there is a profit, they can take a risk and announce an interim dividend and pay it. But even that interim dividend will be added to the final dividend and the total will be approved by the shareholders by declaring in AGM. And the shareholders have the power to reduce the dividend. They are the owners, yeah. What better answer can I give you, sir? They are the owners. So they decide. Okay. And the shareholders have to declare. I don't know how it was declared again. Okay. Hope you got it, sir. This is not covered, but general knowledge. Even you studied this in +2. If anybody answers anything other than A, I will commit harakiri. And it's not even my fault because I didn't teach preference dividend. Yeah. Everybody got A correctly. Yeah, it's 11th level question. Mustafa, you're so great. Yeah. I love you. It's absolutely 11th standard level question. Maybe not 11th, maybe 12th, because company accounts will come in 12th now. +2, right? Yeah. Preference shareholders get the right to receive dividend in preference to the equity shareholders. They get it before the equity shareholders. Right? Exactly. That's why I said this is not my point. I'm only so if you now here again, some of you have to change your attitude. In those days, subjects were there in school: accounts, law. Sir, accounts question you can't ask in law. Law question you can't ask in accounts. That was an argument you could give to a 5th standard or a 10th standard or a 12th standard, maybe 11th or a 12th standard teacher. But when it comes to the institute, we expect that you should be able to combine knowledge from multiple disciplines and bring it here. Okay. Why I'm giving these inputs to you, help you to evaluate and understand the nature of the exam you're writing. A, don't underestimate it. B, prepare it for it in a meaningful way. Don't use the same techniques you used in +2 and university exams for paper. It won't work. many people. See how many of you gave the right answer. Wow. Everybody. Beautiful, sir. Sorry. Everybody. Correct. See, the WhatsApp link is already there in the chat. Just go check it, Miss Lakshmi. In fact, company accounts and company law, there'll be huge overlaps. Not only company accounts, and if you're really smart, you'll realize that auditing is also linked to company law. Especially when we come to auditors portion and accounts portion, you'll realize that what you study here, you don't have to study in auditing. Again, if you're smart, you won't do that. But don't tell that faculty, already law faculty told us like that. Because teachers like to give some information and think that they are told originally. All are false. All will continue. D is the correct answer. Though A would be logical answer. I don't know how you get C. Because definitely, if you don't pay preference dividend, you cannot pay equity. There is a general law. Redeemed debentures is already there in this chapter. And deposit matured, failed to deposit matured is already here. Okay. Now, they cannot declare. You saw this is there in this chapter. Debentures is also here. Okay. So, which of the following can be declared without profits? Yeah. A little confusing, no, all this. Just joking, since somebody here told me, accounts faculty already told, I'm telling, don't tell this to audit faculty. When I teach in our audit, he will also teach it. From a different perspective, he'll teach it. From the auditing perspective, from the rules and regulations relating to auditing. That time it will be a little overlap. Boss, I'm giving a very important clue. Identify these overlaps. Your preparation time will be reduced like anything. See, I'm giving you many, many clues. I don't know how many of you are even listening to what I'm saying. Correct. Universally study. That is an intelligent student. See, such a student who knows overlaps, who knows all this, it is 100% rank holder. Yeah. The man has really understood the syllabus. The expert level, he knows. That's why he say, hey, this I know there, yeah, that I know here. That gentleman or lady cannot get anything but rank. I'm telling you today. That level, again, we are not blah, blah, blah. You should be thoroughly there. Good, sir. Just these are all suggestions I'm giving. Don't take it otherwise. Yes. See, interim dividend can be declared even if there is no profit in the quarter immediately preceding. You understand? But you can't declare interim dividend if there is no profit. There should be profit, but in the quarter preceding, you made loss. Okay. But there should be profit in the P&L account balance. P&L account balance should be there. Whereas even if there is a negative, cumulative preference shares need to be paid. So B is the correct answer. And many of you got it correctly. Y for what? Y sir, what? Y sir? Preference dividend, interim dividend. See, interim dividend, you cannot declare if there is no profit. Means there should be some profit in the P&L account balance now. Otherwise, you cannot declare it. Okay. Minimum, there should be some profit there. Final dividend, 100% you can't declare without profit. But if in case you don't have profit, you can declare out of reserves, but that's not, initially you cannot declare. You have to submit to conditions only you can declare. So preference dividend is the correct answer. Actually, you have said here fine plus should be and. It's okay. B is very funny. Even interim cannot be declared without profit. You can declare interim dividend if at the end of the quarter, there is one quarter, there is a loss. So there is a loss in the quarter need not prevent you from declaring interim dividend if you have huge profits in the P&L. See, you can declare interim dividend right from the end of the earlier financial year, right up to date of holding AGM loss. So once you prepare your financial statements on March, by April, May, June, any smart board will get information about profitability. June month, they're not doing well also. They can say, let's declare. Every year we've been declaring interim dividend. This year also we will declare. Most of you are given that right. C. Somewhat A. If a company fails to transfer dividend to unpaid dividend, sorry, not payment of dividend. Okay, so sorry, the answer is wrong. Sorry, I correct it here and no. Correct it here and no. The correct answer is A. Sorry, I correct it here and no. Correct answer is C. So sorry. Because this is, sorry, I have. Okay, the correct answer is fine. I'll change my PowerPoint. If a company fails to transfer dividend to unpaid dividend, so transfer to unpaid dividend is merely non-compliance with the provisions relating to unpaid dividend. There it's only fine. It's only non-payment of dividend within 30 days. And non-transfer. Of course, non-payment of dividend straight away. But if you see, if you don't pay it within 30 days, you can't transfer the entire dividend to the unpaid dividend account. No, you not paid now. How it can go to unpaid? It's not even paid. You can't transfer it and keep it. Then why would you do that? So if you have made an effort to pay, no problem. No effort was made to pay, that it is over, then fine and imprisonment. But here, it is only a failure to transfer dividend to unpaid dividend. Sometimes in multiple choice, we get it wrong. I'm so sorry about that. Sometimes it happens in multiple choice. Which company is not required to transfer dividend to unpaid dividend account? We saw that. In my slide, it is there. In the book is also it is there. Yes. Decriminalization of not complying with unpaid dividend. That's decriminalized. So no, absolutely correct. Okay. Section 8 company should not declare dividend. There's a prohibition on them to declare. So question of transfer to unpaid dividend will not arise for a Section 8 company. Are you able to understand? Section 8 company is prohibited from paying dividend. Right? So such a company cannot be required to transfer dividend to unpaid account, but that is not the way you talk about it. See, it's only when I have unpaid dividend, I have to transfer the dividend to unpaid. Whereas government company specifically exempt. We saw that. Want to see it again? I can show you, but it's there in my slide. Slide has been, sure it will be shared with you, or maybe on the portal, you can go and download it. This is very simple. Some of you are going to get very angry with me. So Section 8 company will not pay dividend, but if it pays only, it can transfer to unpaid. No, that is the logic. Try to wrap your mind around the logic. Section 8 is prohibited. Where is the question of transfer? If it's declared only, unpaid. Cannot even declare. That is the logic. If you had asked the question, which company cannot pay dividend, Section 8 is correct. See, I think you should be very, very careful. That one slide, you should be very thorough. Many of you are not thorough with that concept slide. See, transfer to the IEPF happens after 7 years. How it will happen immediately? Please, you have to read the subject very well. Basic understanding should be there. What has been taught in the class, you should remember. Okay. Once it is declared but refuses to accept, it is unclaimed. It has to be transferred to unpaid dividend account within 7 days from the end of 30 days. Then it will be there for 7 years. Then transferred to. Okay. This is not something that you can say, I was not taught, not aware. Like. Last question. Again, interesting question.
Good evening, sir.
Good evening, madam. I will finish this and hand over to you.
Okay, sir. Okay, sir.
This last question I will finish, round up the class and hand over to you.
Okay, okay, sir.
Thank you, madam. Good evening. Yes. 25. B. So, P is absolutely, I already mentioned this in class also, irrevocable. So, you got it right. And dividend, we have really thoroughly done it now because we had more time. We have to do it. Yeah. 25 is B, absolutely correct. Absolutely correct. Okay. There is no way you can avoid. See, dividend once declared is a debt payable by statutory debt. You cannot play with it. It is the point. Friends, this is a nice topic and I hope you had good time. Of course, in the next class, we will be taking up our, accounts of companies, which is again theoretical note, but we can look at it from many perspectives. And I have here with me Shraddha Ji from the Board of Studies. And
yes, a very
good evening. And
sir.
Yes,
I'm
madam.
sorry, I might not be very clear today as I'm driving as of now.
I know you're driving.
Okay.
I will. Shall I end the class? Shall I end it with your permission? Sorry, I'm not able to hear you.
I'm not audible?
Now.
Okay. So, students, a very good evening. Very good evening, Navneet. Any query for Board of Studies?
Sir, I will leave the class, sir. Yeah, I am done. No, but madam is there, I think. Okay. Anyway, I will leave now. Huh? Thank you, Ji. Bye.
Manish जी, yes, Manish over. Okay, 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 sir, sure. Yes, sir. Uh, okay, I am gonna.
Hello. And yes, actually connectivity. Yes, connectivity problem is here. So, students, sorry for the disturbance. Any queries for the Board of Studies, बच्चों? Good evening, Anil. So, students, this was the chapter of dividend, and as no query, when gives you a problem, support.
Yes, sir.
Let's end the session then. अजीत
Okay. Yes, ma'am.
अजीत
Yes, ma'am.
अजीत सेशन एंड कर दो क्योंकि
Okay.
हमारी
Okay, ma'am. Okay, ma'am.
वो कुछ भी
Okay, ma'am.